India's IT industry is dead. Now, where have I heard that before?
Is this a threat, veiled or otherwise, to India's IT and BPO industry?
Right, but off late it's fallen out of favor with the market, right? What's actually gone so wrong for these stocks?
Is Indian IT collapsing?
That obituary has been written so many times in the past. But here's what I think. I think the IT industry in India is like the Undertaker. You think it's knocked out, but it just keeps coming back from the brink of death every single time. And this time, the giant killer is supposed to be AI. Now, I'm already tired of hearing about AI everywhere. Business leaders are boasting about it at conferences. Your boss has probably nudged you to imagine how we'll all lose our jobs to AI. And I bet even that guy selling tea outside the tech park is screaming about AI in his sleep. Okay, I am exaggerating, but you guys get it. AI is everywhere. So, the only question now is, will AI finally bring India's mighty IT industry to its knees? Because if you have invested in IT stocks, or you're considering even investing in them, that should be your biggest concern. Welcome to T-1, a video series by Zerodha Varsity. In each episode, we'll explore the biggest trends shaping India's industries to help you make smarter investment decisions. We focus on the big picture so you can better understand the forces that truly move the stock markets. For today's episode, my colleague Vineet and I spent over 300 hours researching reports, interviewing the heads of AI at IT firms, consulting firms, even those from big tech. We did get most of them to come on the record, although some of them chose to speak to us secretly. So if you're looking to get started on understanding India's IT industry and its situationship with AI, you're in the right place. We'll break it down and give you the big picture of all the moving parts. And then we'll wrap it up with a bull case and a bear case that'll simplify your investment decision. Okay, before we get into everything AI is doing, we need to start with a basic question. What on earth does an Indian IT company actually do?
So I think a modern day IT services company essentially does, broadly in very simple terms, it essentially is a group of people who are able to shape technology, primarily so far in the last 50 years, computing technology to help the business be significantly more productive, efficient in everything that it does. That's like the single sentence definition of what it does. It's a group of people who shape technology, personalize, contextualize, and shepherd it to help the company do amazing things.
Now, I know we asked Ashok to give us a one-line definition of IT, and he did that. But what exactly are these amazing things Indian IT companies do? So we got a value chain of sorts from a report by an investment bank, and I'm not going to name that investment bank here. Now, I also have to say that the IT leaders we spoke to told us it's oversimplified, but they didn't actually tell us it was wrong. So we still think it's quite an intuitive way to understand the basics. So we're going to use that.
All right, Nitin. So at the bottom, we have BPO, which includes customer service stuff, loan processing, admin tasks, etc. So all of this work came to India because India's labor is cheaper than in developed countries. So it was the labor cost arbitrage that caused the outsourcing boom in India.
All right, but just because it's at the bottom, it doesn't mean that it is not valuable.
So you have to remember the BPO is not some only low value work. There is tremendously high value, highly human-centric BPO in like clinical trials where the stakes are so high.
Sure, but even highly human-centric work, that's not immune to automation. Anyway, let's get back to Vineet now.
So next is infrastructure management, which is where a business will use an IT company for its data and security management. Some of them have on-premise data servers, which an IT company will manage for them. Sometimes they do it on cloud. So these IT companies have partnerships with Microsoft or Google for their cloud services to integrate their data and security management on the cloud.
Now, what Vineet mentioned, you guys should refer to these cloud companies as hyperscalers if you want to sound like you know the industry jargon. They run massive data centers for processing all the data in the world these days.
Anyway, so the next is systems integration. This includes managing prepackaged software solutions like SAP, Oracle, Salesforce for enterprises, etc. These solutions help manage purchase data, customer data, supply chain data, and so on. So IT firms help set this up. Next comes application development and maintenance. This is where an IT company will develop a new custom software for their business client. For example, take the Income Tax Department of India. The portal that you and I use to file our taxes was developed by an Indian IT firm. It's also managed and operated by them. So businesses also need these apps and portals, and IT companies help build and maintain these apps for them. Finally, you have technology consulting at the top. This is where IT companies will sit in boardrooms with the business clients and discuss not just tech, but how tech will influence their business outcomes and risks. Business experts say that Accenture is at the top of this segment.
Well, okay, I think Vineet has summed it up perfectly for all of us. But remember that we are not saying Indian IT companies haven't actually evolved to do the stuff at the top of the chain, because everything is tech now, right? You can't run a business without tech. I mean, earlier, if you think about it, tech discussions might have been just between a tech head and the CEO, but now every department is involved. HR folks love tech too.
We're not supplying technology. What's the problem and how can technology help you solve the problem and deliver the outcome? That's the evolution which we see is happening more and more as technology gets front and center. So while classic, but if you break it under the hood, you may still say there's development work, there is support work, there is BPO operations. Yes, absolutely. That's how the service may get delivered or realized. But the end, you're trying to see how is it impacting business or a function? Is it making it more efficient? Is it making it more agile? Is it improving experience for their clients? Right. That's the evolution.
Now that sounds exactly like what a consultant would do, right? It's business strategy and all that MBA type of jargon. And maybe it's because Indian IT firms have actually been quite successful at expanding across this value chain that a report by Goldman Sachs from 2022, it says that Indian IT service companies have doubled their market share in the last 10 years to 6.2% of global IT spending. Now, I know what you guys are thinking. That chart is nearly 3 years old. So I've got something that's updated to share with you too. A report by HSBC Global Research, which came out in FY25, said that if you consider the outsourced segment of IT spending, then 18% of that spending comes to India these days. And it was just 13% in the decade before that. I think that's quite a big leap. But also, let's not jump to any conclusions yet, because now that we have got the hang of what an IT firm does, it's time to throw some AI into the mix. Because there have been 3 great inventions since the beginning of time, right? There's fire, the wheel, and AI. I might have made that up, but AI is one of those big bang type of events that can change the trajectory of the whole world. And now we need to figure out how it impacts Indian IT firms today. And I'm going to ask Vineet to help us actually understand AI a bit better now.
So what is AI? I'll try to break it into 3 parts for better understanding. So first comes predictive AI, which has been around for more than a decade. It's the oldest form of AI. Its job is to give you single specific outcome based on past training data. For example, it will tell you whether or not a customer will buy a product. Or you can give it an image and it'll tell you whether it's a cat, it's a dog, it's a cycle. Then came generative AI, which is more creative and generative in nature. It became mainstream around when ChatGPT was launched. It still uses prediction at its core, but it will generate new content for you, new code or text for you. This is where ChatGPT, Claude, Gemini came into picture. You can instruct it to write an email for you that you can send to your boss. Or you can ask it to generate an image of you chilling with Shah Rukh Khan on the beach. Or you can ask it to create a mini novel that sounds like it was written by Chetan Bhagat. And then the third, that is agentic AI. It doesn't just respond or generate content for you, but it also does action. It acts like your personal assistant that not just drafts the email for you, but also sends it to your boss or update a spreadsheet for you. It can execute a complex task across multiple systems all on its own. All you need to do is tell what to do, sit in your chair and sip on masala tea. That's it. And this has been around for about a few months now, not more than a year.
So in a nutshell, Vineet, predictive AI gives you an answer, generative AI gives you a creation, and agentic AI, that gives you a doer. So what does this mean for Indian IT firms? On the face of it, Indian IT is loving AI and they've embraced it fully. Just look at their annual reports and you'll find it everywhere. In TCS annual report, in just a 2-page letter from the chairman, they mentioned AI-related words 19 times and 113 times in the overall report. Infosys, 139 times, and Wipro, 109.
First, the promise of AI is incredible. I think
if you look at AI,
AI is only going to give more and more work.
Generative AI could be a major advantage.
Generative AI assistants and keep teaching it, right?
The enterprise AI.
Now, that's a lot of AI buzzwords. And of course, we didn't manually count all of the AI words in the report. We relied on ChatGPT very honestly for that dirty work. But the reason why people claim that IT is going to be killed by AI is actually quite simple, right? AI is already making tech work easier and faster, right? It's very good at programming, at creating code. And because anyone can converse with it in natural language to create stuff, the accessibility to AI is immense. Some people even told us that a 14-year-old with a fair sense of AI can actually do what people at Indian IT companies can do now. Now, I know that might be a bit of an exaggeration, but the point people are making is that the gates to software development, right? It has been thrown wide open to anyone, at least to people with understanding at a foundational level. Now, think about this. Why do you think IT companies saw a massive boom a couple of decades ago? We already mentioned that, but it's certainly not because they were run by tech geniuses, right? Rather, it's because they caught that outsourcing wave that Vineet had mentioned about labor cost arbitrage. The pitch then was, you know what, instead of building a tech team in-house and paying two developers, say $150,000, give it away to equally talented folks like us in India. We'll do the same or even a better job at a fraction of that cost. That's the dream that Indian IT firms sold the rest of the world. Save money by outsourcing. But now comes AI and it's a different beast, right? Because here, the argument from anti-IT folks is that they say it's going to get cheaper to keep tech in-house. Because with AI, you don't really need a massive team anymore. You can get two people who can do the work of 10 with AI tools. You've got companies like Microsoft and Google already claiming that 30% of all new code at the company is written by AI. So you actually understand that argument. And with a tool like GitHub Copilot, it's not just generating functional code, it's also debugging it. The prediction is that companies will try to cut ties with IT firms and just get more productive themselves, right? With in-house, local, smaller teams. I mean, global tech giant Cognizant even said that companies are setting up their own GCCs, the Global Capability Centers, to handle all the tech stuff, which is a threat to IT service businesses. And you could say that GCCs are a strategy to move things in-house to even cut costs, right? And on top of all of this, we have the impending coming of age of agentic AI to shake things up even more. Now, just in case you didn't pay attention to what Vineet said about agentic AI, I'm going to try and explain that again. So just imagine a software-based agent cosplaying a human and doing the human's role, such as writing code, reviewing code, publishing it, and handling that whole loop of tasks, right? Autonomous is the word for this future. And Bernstein's reports say they expect 17 billion of these AI agents to be around by 2030. 17 billion, right? Now, I'm not even getting into what this could mean for jobs, but the end point is that the role of a human being in a workflow is expected to drop dramatically thanks to these agents, is a rise of the planet of AI agents, right? So human alone tasks, it could go from half to a third. That's what the prediction is from folks like Bernstein. And if that happens, you really need to wonder what's the actual role of Indian IT firms, right? Because I know I might be getting a little ahead of myself over here. All of this is in the future. But here's what I've learned from all the interviews. AI is still very new. It still hallucinates. Sure, it's getting better than what it used to be even a year ago, but you just can't trust it fully at the moment. And that means you still need someone to ensure it doesn't break, that the agents don't break, and that whatever the agents create isn't actually some hallucination either, right? And even the most die-hard AI fans quietly told us that AI is not taking over the world just yet. Now, if that's the case, think about the landscape in which these Indian IT firms operate and who their clients typically are.
These enterprises are banks, retailers, telecom companies, automotive companies, right, health companies, life sciences companies, etc. That's a completely different world than how you and I engage with AI today as an agent, right? Here, the landscape is much more complex. You can imagine these are multi-billion-dollar companies. Some of them are global. They have fairly complex technology infrastructure and stacks, etc. It's not as simple as putting an agent to work and say, why do I need humans? Or, I can do it cheaper. right? Because of an agent. To some extent, it may be true because there may be some parts of that work which can get automated through an agentic workflow or deploying AI more, easily. But I think the fact is to make all of that work, there are 2 or 3 things that are required. It has to integrate with the larger landscape. It doesn't work simply. I'm not building a greenfield application where I can get somebody to generate code, test it, and launch it. I'm really integrating it into the larger complex application landscape. So it requires much more nuance in terms of understanding that process, the business, and how do you integrate technology.
So IT firms are dealing with massive conglomerates who are decades old, right? They're not startups in that move fast and break things mode. So you need a human in the loop for all the change that's taking place. There's way too much at stake for large enterprises to change their systems and processes without a review. For a minute, just imagine that you run a healthcare company. Do you really want to risk AI fiddling with all that private data all by itself, or do you want someone else to oversee it? Your answer to that should answer everything you need to know for now. Or maybe another way to look at it is that you could even say that those firms want someone to be accountable for those projects, someone to point fingers at and say, look, I paid you money to get this done, perfectly error-free. So IT companies play the role of that accountability partner.
We won't maybe see an immediate impact because of the kind of services they deliver. Everything is so entrenched, legacy stuff that they maintain. Nobody really wants to unleash AI, which is brand new, on that. And that'll provide enough inertia for these services to maybe expand even in the near term.
And it's also about relationships, because IT companies anyway spend less time coding and more time building those relationships to align business interests. And trust me, we are not making that up. It's what an IT leader actually told us. So if you put all that in perspective, Indian IT firms and their humans aren't going extinct just yet. And I'm going to tell you one more thing over here. Have you seen that viral report from MIT that said 95% of Gen AI projects at companies are failing? If you have, or if you haven't, the gist is that generic AI tools work for individuals, but they fall flat in enterprises because of all those complex workflows, right? But if you dig a little deeper into that report, you'll find something that could be, I think, what is a silver lining for Indian IT firms. Because forget that headline, right, which say that almost all those projects are failing. When companies avoid in-house pilots and build partnership with third parties to roll out AI projects, they succeed 67% of the time, right? So now one way of looking at it is that if companies feel FOMO and they want to play the AI game, they might see this AI study and realize, hey, listen, it's a foolish affair to build everything on our own. And they'll try to maximize their chances at success, right? And to do that, where will they turn to? Indian IT firms. Maybe. We're not sure, but maybe. Let's set aside all the rosy stuff now and talk about the thorns, because what's a rose without some thorns, no?
But the threat that, I see is the number of people required to do the job, okay, is not going to be incremental from what we've seen historically. To do the same amount of work, we need lesser people. And that nobody can deny.
What this means is that IT companies can do more with less. And you can see this playing out already in hiring data. IT firms aren't actually adding as many jobs as they used to. Entry-level recruitment, which was the foundation of IT firms' pyramid model workforce, it has decreased by 50% compared to pre-pandemic levels. That's what the employee consulting firm TeamLease has said. Now, I know I promised thorns, and this doesn't actually sound like a bad thing at first. It just sounds like the opposite of a bad thing. It seems to be a big win for IT companies from a margin perspective, right? Because the biggest expense is the human capital. If you take TCS as an example, you'll find that 60% of revenues for TCS, it gets paid out as employee expenses. So Vineet now has an answer for us over here.
So let me highlight 2 things here. Sure, IT companies will not hire as much as they used to, but they still have a massive employee bench strength. These are the employees who are on their payroll but are not deployed on any project yet. IT companies are one of the largest employers of white-collar jobs in India, so questions will be asked if they fire them. And second point, the people who are already on the team, the company has to spend on their upskilling so that they look smart in front of their potential clients.
So these margins were not reflecting in IT companies because there's a simultaneous investment which is happening. in skilled labor, in infrastructure, in a lot of other things. So that's the sort of conundrum which any company or any industry or any sector which is going through a transition has to happen.
So while the future might look different, it's the distant future that's a positive. The near term might actually still see some hiccups. Then there's the billing model itself with IT, or how the IT companies make money. The vast majority of their revenues comes from something called T&M, or time and materials. In 2004, these T&M contracts accounted for more than 62% of revenue for the top 4 tech companies in India. And talking about these IT services, right? And this is from consulting firm Zenome. But this fell to 48% in 2014, and it's now at 36%. If you look at individual companies, you'll still see some of them at 50%, but the point that we're trying to make is that the billing system is changing. And there could be a couple of reasons why this has evolved this way, and Vineet's now going to come in and lay out our observations for you.
So about 2 decades ago, when businesses were still embracing technology and experimenting, the T&M model was preferred, and this worked perfectly for IT companies. But now the businesses have matured with their technology adoption. They are more clearer in what they want. That means they can clearly tell what they expect and how they expect it. So they prefer a fixed price contract model.
Now, I just want to clarify over here that we are actually not definitively saying that one model is way better than the other, right? Because some techies have actually told us that T&M is better for IT companies because they have a large junior employee base that can now be put to use, and all their hours can be billed easily in this way. Whereas another IT head told us that in a fixed price project, a services company can use graduates with less experience because anyway they're bound to deliver the project with agreed quality at a fixed schedule, right? That's a non-negotiable. So this way, they can actually groom the juniors. Now, we don't know who is right or wrong, but what you folks need to know is that even these pricing models might be getting disrupted in the age of AI.
Is when agentic AI comes, typically we produce outcomes. We help with workflows, and there, whether we price customers only on a T&M model or a fixed price model, we can. But the benefit or ROI for the customer is far higher than just doing it, because we are replacing effort that an employee from the customer side is going to spend. Right, so that's an area which will evolve from a pricing perspective. No, I'm thinking that it's going to move towards an outcome-based pricing.
Companies have already started demanding that they link fees to business impact, like cost savings or efficiency gains. Right, this is the sort of numbers that you and I will probably show in our resume. Right, like I did X and saved the company 30% in cost. I implemented Y and it resulted in a 40% increase in 5-star reviews for customer support interactions, all that sort of things. And it's too soon to say how a new pricing model for projects will impact IT companies. Some say it will put pressure in the short term on margins, but it's something that you will want to actually keep an eye out on. What we can tell you is this. Operating profit margins for the big IT firms in India have seen a steady decline in the past decade. They did get a bump up immediately after COVID, right? When everyone expected automation and work from home, those themes to actually play out. But it has dropped again since then. Sure, now we can't attribute falling margins to simply how the business billing models are changing, but well, there could be some impact over here. And if you look at some IT firms, the management themselves are coming out and telling you that you need to be aware about these margin pressures. HCL Technologies, they've revised the margin guidance downwards from 18 to 19% to 17 to 18%. And analysts have actually found it quite surprising because all this while, revenue guidance kept changing, but margin guidance, they never changed that. And companies are talking about margins now too, right? So it actually doesn't sound too positive. Now there's a competition aspect too, which Vineet is going to highlight for us.
I'm going to borrow this from a Bernstein report, which has an intriguing way of looking at the future. It is based on a basic premise that there's going to be a face-off between software companies like Google, Microsoft, and even OpenAI, and IT services companies like TCS, Infosys, Wipro, etc. To add to that, I'd say we can even add consulting companies like Deloitte and EY in the competition. So everyone's encroaching on each other's stuff. Software companies will try to offer more services, and services companies will try to offer more software. That kind.
The competition landscape, especially in areas like data analytics and my areas like AI and intelligent automation, is definitely expanded. The competition which used to maybe just be in certain segments of what I described, from MBB firm to Indian IT to global IT vendors to big fours and boutique firms, that has kind of got mixed up, and they all compete with each other in different client segments, different deal scenarios.
So sure, competition is heating up, but Vijay doesn't think that this will play out quite the way that Bernstein predicts.
I would say not entirely, Nitin. But I'll try to describe this, right? I would try to break this into the product OEM section of software, which is the hyperscalers or other people who make servers and the device drivers on top of it, or even software package vendors, right? ERP, CRM and all. That's one part. And then there is the services part, right? So these two are separate. They really do not head-on collide yet in the competitor space, and I don't see it, at least my view, or even I would say Deloitte's view, in the near term. In fact, it is more of a cooperation and alliance play.
Although in a world that's rapidly changing, we'll now have to wait and watch how long these cooperative alliances remain, and when there will come a time when everyone will try to one-up each other and take all the profits for themselves. That part, I think, is going to be interesting, right? But anyway, from what we have gathered from all of our conversations, the IT industry isn't dead and buried by AI. Not now, not ever. Okay, I know, we can't predict that far ahead into the future, but the probability that companies will need IT firms in some form or the other is quite a high probability. It's just that how they operate will change.
Most companies will find it very difficult to build and maintain high-quality technology. Most companies are not tech companies. Even technology companies find it immensely hard to build and maintain systems. So if the question is, are there going to be companies who will always require external IT help? For sure, definitely. But the quantum and the nature of such services and the services that are delivered and sought is going to change drastically.
Which brings us to the entire point of this T-1 video. Is there an investment case for IT in a world of AI? And there are two ways to look at it. Are you negative on the sector, or are you negative on the future price performance?
So from a company, sector, industry point of view, I think this is a very adaptive industry. They do find a way to thrive and to grow. But when you look at it from a stock perspective, there's a very different dimension you have to look at it. How much of froth has been built into the stock? How much more money can I make?
So we looked at a report from JM Financial, which was published in August this year. It says that if you look at the 1-year forward PE of IT companies and you compare it with their 10-year historical average, current valuations look expensive. But if you compare the same with 5-year average, they look cheap now.
Now, there's no right answer to actually say if a 5-year or a 10-year historical average is better. But we'll point out one thing. Looking at even a 12-month forward price to earnings ratio is tricky, because you're trying to extrapolate the earnings 12 months into the future first. And that's supremely hard with all the uncertainty in the world, right? You got Trump playing God with his tariffs, even considering a ban on IT outsourcing to Indian companies. So that's making companies quite cautious in how they're allocating and spending money. Do they really want to spend a lot on AI transformation at a time when no one can actually predict what announcement Trump will make tomorrow that will impact the business? Probably not.
Sort of macro headwinds which are now facing the industry, or that is what we are seeing from the outside. And to that extent, a little bit cautious. Lastly, there's always a relative context. If I'm going to be putting in 100 rupees of my own into a particular stock, what is the relative value or relative gain I will make by putting it in another stock in another industry? So IT doesn't score very heavily there.
Now, throw in the fact that when America sneezes, Indian IT catches a cold. Because anywhere between 50 to 60% of revenues for large Indian IT firms, they come from the US. It's even higher for some of the smaller players, such as LTIMindtree, which has 75% of their revenues concentrated in the US. And there's also a real strong correlation between US GDP and IT spending. If America grows and grows well, companies tend to spend more on building more future-ready IT systems. If America stalls, companies pause. So, how do we now separate the noise from reality? Especially when IT companies, they're actually announcing AI projects. they're hiring heads of AI, they're setting up business units dedicated to AI, right? The question is, have the IT companies actually got it all figured out today? And the honest answer is that none of us know.
When we say AI, the whole large language model, generative AI based reality is very, very, very new. It's barely 3-4 years old in its nice functional sense, but LLM's ability to write solid code and kind of disrupt software development models is just about 16 to 24 months old, maybe 1.5 years. So to assume that the big IT services firms or anybody in the world really knows what they're doing and really knows the definitive outcomes of the rise of AI is a mistake. Even the people who are building these AI models don't really know where they'll end up at. So how can you so confidently say that we'll adopt AI and transition our X from X to Y in the next 2-3 years? So most AI-related announcements are hype.
The only thing is that if companies don't talk about AI, right, and they don't mention how much AI efforts they're putting in, analysts and investors might actually read into it that the company is falling behind the AI race. So everyone would then rush to dump such an investment. So mentioning AI might not actually add so much of value, but not mentioning it, that could be detrimental to the health of Indian IT firms. So basically, all of us are making an educated guess at this point in time as to how the future of AI will actually pan out. Now, I don't know what you guys are actually thinking about the IT industry in India right now, but we are now going to leave you with the bull case and the bear case for IT companies as we have promised. I'm going to tell you the bull case first, and then Vineet will jump in and lay out the bear case. So, here are 5 reasons why the Indian IT industry could still prove to be an interesting bet. Number 1, even in the midst of this AI hype, there has been a lot of negative news coverage about Indian IT. So it has not actually been a one-way rally or anything on those lines, which means the investors' expectations aren't euphoric. They could be rather subdued. And with valuations not completely out of whack, as we pointed out earlier, I'd like to think a large part of these concerns are actually priced in. You can't paint all of the IT industry in India with the same brush. Sure, large Indian IT firms such as Infosys or Tech Mahindra, they may not be very agile because of their own legacy business models and their reliance on divisions that aren't really tech-based. But remember, there are mid-cap companies too, like Happiest Minds and Coforge. And there's agility in the small-cap space, which people say have been beating expectations when it comes to both organic growth and margin performance. Number 3, there's always going to be companies that want help with IT and tech. And an example that has really stuck with me is the clothing giant Trent. In 2022, they realized that they were relying on legacy tech stack and they needed to change quickly. Now imagine, this is a Tata Group company that runs in the same circles as TCS. Despite having a tech company in their corner, it took Trent so long to make a change, and I think there will always be companies that actually need some kind of handholding. Number 4, if I expand on this, it seems hard to believe that just because AI is suddenly everywhere, companies with legacy old systems and ways of working, they'll suddenly become agile enough to build things in-house. Remember we spoke about GCCs earlier, right? So just to revisit that and give you a counter, there's actually an opportunity here. The Everest Group, a couple of years ago, said that the number of GCCs set up using the build, operate, transfer model accounted for less than 10% of all GCCs. That's now nearly 40%, which means companies are actually asking Indian IT firms to help set up GCCs. Lufthansa, that German airline, decided to set up a GCC in India earlier this year, and they didn't really use a DIY approach. They turned to a long-term collaboration with Infosys. And point number 5. I think this bit from a report that Nuvama had published last year, it puts the whole thing in perspective. They say that Indian IT services companies follow a curve. The first stage in the curve is the innovator phase, right? This is where new technology that clients start to explore. And because it's exploratory, clients use larger business consulting players like Accenture, which we mentioned, or even startups for specific use cases. So in this phase, Indian IT firms lose out. They get sandwiched between them. The second stage of this curve is early adopters, where new technology gains widespread adoption. Indian IT firms have trained themselves for it, and they hit the scene with the same delivery capability at a lower cost. This helps them to recapture any market share and get robust growth. And stage 3 is late majority, where the technology becomes ubiquitous, right? Clients start looking for ways to save costs. So there's vendor consolidation that happens here. That might lead to tepid growth in that specific technology. So if you consider this in the scheme of things for AI, we seem to be in the innovator space. So Indian IT firms could get a nice boost as everyone moves to early adopt. Now, I know I said 5 points and I've already finished 5 points, but I have to actually now make a call back to what we began the video with, which is the obituaries of what has been written about Indian IT. So I saw this report from 2013 by KPMG when SMAC, the social media analytics cloud was all the rage. This report said that there would be increased pressure on IT vendors. Did it happen? Not really, right? So maybe AI will be similar too. Anyway, so now that the bull case is out of the way, lay out the bear case for me, Vineet.
Okay, Nitin. Now, I also have 5 things to highlight from my bear case. Number 1, let's take the performance of Indian IT from the previous big tech era, which was SMAC, Social Media Analytics Cloud. This began from around 2014. Do you think the Nifty IT index has outperformed the Nifty 50 or Nifty 500 in this past decade? No. The Nifty 50 is up 300% in absolute terms. The Nifty 500 has risen by 375%. But the Nifty IT index is up only 270%. So sure, the industry has survived, but it didn't really thrive if you think about it this way. Point 2. As far as profitability is concerned, most Indian IT companies peaked around COVID and have since seen a decline in their operating and net margins. Today, even their constant currency revenue guidance for the future is in very low single digits, which doesn't give too much confidence. Point 3. Typically, companies have outsourced IT-related work to save costs and improve their margins. Rather than hiring expensive developers in-house, find someone who'll do it for you cheaper. But with AI being commoditized, it gives an opportunity for companies to build a leaner tech in-house. So the extent to which IT companies win deals will reduce. Point 4. But Indian IT companies are diversifying into ER&D. They are buying companies with deep expertise in engineering, consulting, and technical services in the industrial, aerospace, and automotive industries. Cognizant bought Belkin for $1.2 billion last year. Infosys bought Intech. Wipro has just announced its acquisition of Harman Connected Services. Now, this could show that they're not seeing enough growth in their core business and hence are looking outwards for other avenues of growth. So in a traditional sense, that doesn't make me too excited because ER&D is its own established niche. Buying players is fine, but it's not a guaranteed success. Number 5, AI native companies like Fractal Analytics who are coming to the market. It could well be the first listed AI company in India, and it does enterprise solutions and business consulting work for enterprises. Investors might be more interested in companies like that who you could argue don't have legacy business segments like BPO that big IT firms have. Of course, this is not a recommendation. And I have a bonus point too. Warren Buffett was sure that technologies like cable, radio, and TV were going to grow massively. That is why so many people got into the business of those goods. He just wasn't sure who might succeed. It made technological sense for him, but not business sense. That's why he did not invest in tech companies for the longest time. So AI as a technology will grow massively. But the ones who are creating AI-related products and services, that's a different matter altogether. And you could argue that's not a very good investment case for them.
Well, folks, I guess that's it from Vineet, me, and you've heard all the other experts too. That was the very first edition of Zerodha Varsity's T-1 and our breakdown of the Indian IT industry and the impact of AI. Now, we'd love to know what you folks think about the IT industry and how it's going to work out in an AI-first world. So drop in your comments and let us know what you think about India's IT industry in an AI-first world. We promise to read all of your comments too. So we'll see you again in a couple of weeks with a brand new T-1 breakdown of a sector that you won't want to miss.